All right. Hello, everyone, and welcome to today's webinar. What is Bitcoin life insurance? It's actually a more interesting topic than I would have thought of it was a couple months ago. Real quick, I'm Lou Kerner with Crypto Mondays. For those who don't know, Crypto Mondays, we originally started as a meetup on January 2018. Today, we have 55 active chapters around the world. 55th just started last week, Crypto Mondays New Orleans. So there's probably one in your city, and if there's not, start one up. We also do pop-ups at the major events. So we're throwing a big Crypto Mondays in Singapore if you're going to Token 2049 on Thursday the 2nd. Crypto Mondays also, we build different things. We built 2 cohorts of an AI Web3 accelerator, and we started something called DIA, which is a decentralized AI agent alliance. And we have more than 150 founding members of that who are trying to solve the same problems that everybody building decentralized AI agents is trying to solve. So that's a great organization. And then the last thing we launched was a Bitcoin treasury on chain. It's an on-chain Bitcoin treasury, btalk.app. And it was while going down that rabbit hole, the BTCfi rabbit hole, that we ran across, Bitcoin insurance and tried to understand what it was. And I really, yeah, I mean, it seems like a no-brainer, and as part of kind of the BTCfi stack, I think it's something that few people are really aware of. So thanks for coming and sharing with us what Meanwhile is up to. We'll talk for about 10 minutes, and then or 15 minutes, and then we'll open it up to questions from the audience. I'll have some questions, I'm sure, as we're going along, but. And just one more second. I just want to. Okay, stop that. Okay, awesome. I'll turn the floor over. Jason, you've been why don't you start off? Tell us a little bit about your background and how you got to Meanwhile, and then really look forward to hearing about what Meanwhile is up to.
Awesome, thanks, Lou. Yeah, I've been in the crypto space since 2013. Traditional Wall Street prior to that. I've had a number of roles. Started a crypto fund in New York in 2014. Co-founded Credit Suisse's blockchain team 2016 to 2020. Started a white glove concierge to help high net worth and family offices allocate to the crypto space, basically all throughout COVID. COVID markets were good for crypto, got a lot of clients, a lot of referrals. Everyone was happy. They were buying this Wild West crypto token, mostly Bitcoin, but also ETH and some other altcoins. And, during COVID and during that roaring bull market, 2020, 2021, part of 2022, we saw most people would buy and have immediate gratification that their risky decision paid off by, generally you'd buy today and tomorrow it'd be up 5%. So those were good times. Ultimately, sold that business to a crypto fund spun out of DRW in Cumberland called Hashnote, which was an on-chain private wealth asset manager. And finally, I joined Meanwhile. I actually discovered Meanwhile last year while I was still at Hashnote, and the light bulb went off for me immediately. The concept of Bitcoin denominated whole life insurance, someone like me was a perfect candidate because I have low cost basis Bitcoin. I have a family, I have a wife and 2 young kids. Everything in life insurance is tax-free. Assets grow tax-free. You can borrow against your whole life policies without paying a dime in capital gains taxes. So I'll get into it. I got my own policy, and then I joined the Meanwhile team earlier this year. It was one of those, the product is so good that you join the company. How can you not? So I run business development for Meanwhile. I'm in charge of distribution, strategy, growth, partnerships, and sales. And
Okay, before we get into Meanwhile, just real quick, because you got a super interesting background. I think one of the things, at least it's my recollection, that probably not very many people don't know it, but that CS First Boston was really the first major investment bank to have a dedicated crypto team.
That's right. I co-founded it in 2016. Most banks at the time were, and they follow this philosophy of Bitcoin bad, blockchain good. So we'll have a blockchain technology team that sits next to AI, machine learning, robotics, big data, cloud. We were the blockchain team. We were DLT, distributed ledger technology, trying to, create efficiencies and automation and basically trying to save costs, reduce settlement times, things like that, using a distributed ledger. And so obviously people were asking about crypto all the time, and that's what spurred me to start my own, concierge to help basically VIP clients of the bank who were asking for help allocating to crypto, to Bitcoin, to ETH, what else, where do you buy, how do you custody, all these things, how do you plan for taxes and estate planning. The bank was not touching it because Bitcoin bad, blockchain good. So I left and started my own company, and then that ultimately led me to Meanwhile, where it's the ultimate tool to have Bitcoin in life insurance. It's one of those things that life insurance, I never really thought of it. I mean, I got married, I had a kid, I got term life insurance. It's pretty cheap. Whole life never made sense to me. It was very expensive, and you have a 4% guaranteed growth rate that goes in a mutual fund. And now I'm by the way, Lou, I'm going to start getting into the Meanwhile presentation, and this is kind of a good segue. Um, with traditional life insurance, you basically go to a life insurance carrier and you ask them for coverage. You say, I'd like $1 million in whole life insurance death benefit, where if I die, my family gets whole, $1 million. And they'll say, great. They'll crunch some numbers based on your age, your health, your sex, your smoking status, and they'll dictate to you an amount of premium that you have to pay in dollars and fiat. And that premium obviously has baked in fees and expenses, and it goes into a mutual fund. And that mutual fund has a guaranteed growth rate of about 4% per year. It basically tracks the equity and fixed income markets on a conservative basis. What's great about whole life, though, is that it grows tax-free. So that 4% a year grows tax-free. And in the future, you can borrow against it tax-free. Whereas with an IRA, you have to wait till you're 59 and a half before you can get any access to the cash value. With whole life insurance, you don't have to wait till any age. And let's say that mutual fund is up 20% after a decade or two. You can borrow out of it. You need cash for a down payment on a house without paying 20% capital gains. Any other asset that you invest in that's up 20%, you need cash. Most cases, you're going to pay capital gains taxes on that 20% appreciation, but not whole life. And so Meanwhile took the approach of, well, whole life is a pretty brilliant product. It's very expensive. It's kind of boring because it goes in mutual funds at 4% a year. And equity markets are up, what, 20, 30% this year already. And you sacrifice the growth potential there, especially if you're young and willing to take a little bit more risk. And so while the benefits, the tax benefits of whole life and the legacy and the generational aspects of it are interesting, how can we wrap Bitcoin with life insurance? And that's exactly what Meanwhile did. We set up a brand new life insurance carrier completely on the Bitcoin standard. Founded in 2022, we're domiciled in Bermuda, where, as many of you might know, most insurance, life insurance, reinsurance companies are domiciled in Bermuda for good reason, because they're one of the premier regulators, the Bermuda Monetary Authority, of insurance companies on the planet. They add a lot of credibility. There's been barely a single insolvency of an insurance company in Bermuda's history, meaning that you feel pretty safe when you know that you have a strictly regulated life insurance company that is based in Bermuda. And so we operate in the US and Canada. And as I said, we're on the Bitcoin standard. What does that mean for life insurance? Well, you pay your premiums in Bitcoin, your death benefit is paid out in Bitcoin, and you can get those policy loans in Bitcoin. But if Bitcoin goes up, you're getting a new stepped up cost basis. So let me explain how that works. We love the idea of life insurance. We adapted it to Bitcoin, but we had to change a few things around. Whereas with traditional life insurance, you get told how much premium you have to pay in dollars. We can't do that with Bitcoin because we don't know how much Bitcoin everyone has. It's a scarce asset. We can't tell you how much Bitcoin to pay in premium. So instead, you come to us with an amount of Bitcoin, spot Bitcoin, not wrapped, not ETFs, but spot Bitcoin that you have that you'd like to use as premium. The premiums are always going to be paid over 10 years in equal annual installments, not monthly, but annually, 10 times, and then you're done for life, hence whole life. And you come to us with an amount of Bitcoin you have. It might be 5 Bitcoin, might be 1 Bitcoin, might be 10 Bitcoin. Let's use 10 for round numbers as an example. You say, I have 10 Bitcoin. I'd like to explore what that means. What can I get with 10 Bitcoin in premium? Well, we will then crunch numbers as a life insurance carrier based on your age, your health, your sex, your smoking status, and give you an amount of death benefit that you will get for that 10 Bitcoin in premium. And as an example, that the death benefit ratio changes based on your age. Obviously, the younger and healthier you are, the longer we expect you to live and the bigger the death benefit relative to premium. Whereas the older you are, the smaller the death benefit relative to premium. But as an example, 35-year-old healthy non-smoking male, 10 Bitcoin in premium gives you about 18 Bitcoin in death benefit, 1/8. That's an extra 8 Bitcoin you get over the course of your life. And we grow our balance sheet by 2% a year. So what you're getting is 2% per year annual compounded growth rate in Bitcoin denominated terms. So there's really three things you get with Bitcoin life insurance. One of them is 2% yield. That's pretty great. Conservative yield, nothing crazy. There's no options involved. I'll explain how we get yield a little bit later. You get the policy loans. Now, this is where it gets interesting, and this is what sells most of our policies. Whereas I said earlier with the traditional life insurance company, the policy loans is up 20%. You can borrow, not pay cap gains in the 20%. You never have to repay the loan. Pretty good. It nets out of the death benefit. You have $1 million policy, you borrow 100K, your new death benefit's 900K. With Bitcoin, you're going to be borrowing Bitcoin, not dollars. And so when you get a policy loan, it works as follows. Let's say Bitcoin goes to $1 million a coin one day. Well, you have two options if you have a policy with Meanwhile. One is sell Bitcoin at $1 million a coin, but you're going to pay a very big capital gains tax relative to your cost basis. Option two is borrow against your life insurance policy. And the way that works is as follows. You can borrow up to 90% of the surrender value of your life insurance policy. And so let's say 5 years down the road, Bitcoin goes to $1 million a coin. You want to initiate a policy loan. You log into your Meanwhile account. Everything's online. And you click the policy loan button. What that shows you is the maximum amount that you can borrow, 90% of your surrender value. And you decide you want to borrow, let's say, 2 Bitcoin. Well, you're going to get 2 Bitcoin, not dollars, but Bitcoin. You're going to give us a wallet address. We're going to screen that wallet address with Chainalysis, make sure it's not going to North Korea or something like that. And we're going to send you 2 Bitcoin. Your death benefit was 18 in that example. That 2 Bitcoin you're borrowing nets out of that 18. So now your new death benefit is only 16 because you're borrowing 2. So now you have 2 Bitcoin in this wallet that you told us to send it to. Presumably you want cash. What you're then going to be able to do is go to any exchange or broker that you have an account with, and you're going to sell 2 Bitcoin. But they're going to say, hold on, where did this Bitcoin come from and what's the cost basis for tax purposes? Well, you will have a loan document from Meanwhile saying that this comes from your regulated life insurance policy and that the cost basis was established on the day you originated the loan. You're getting new Bitcoin at a new cost basis. You're not borrowing, selling using your original Bitcoin that you used to pay premiums. You get different Bitcoin at a cost basis that's established on the day you originated the loan. In this case, $1 million. So if you sell limit order at Coinbase $1 million a coin, and your cost basis on the 2 Bitcoin is $1 million a coin, well, then there's no delta. There's no tax liability. Your cost basis and your sale price are equal. You sold 2 Bitcoin at $1 million a coin. That's 2 million cash. You withdraw it to your bank account. You keep that 2 million cash forever. You never have to repay it. There's no requirement to repay life insurance. Just like I said, the $1 million fiat policy, you borrowed 100K, the new death benefit's 900K. You never have to pay the 100K back. Your death benefit with Bitcoin was 18, you borrowed 2. It carries a 3% interest rate on that 2 Bitcoin that you're borrowing. So it's a low interest rate loan as opposed to borrowing from lending desks at 12, 13, 14, 15%. You're borrowing at 3% a year on the 2 Bitcoin. You never have to repay it back. And you're never at risk of a margin call. Let's say Bitcoin has a bear market, crashes 80% from $1 million to $200,000. Doesn't matter because you borrowed Bitcoin against Bitcoin collateral. You're borrowing from yourself, your loved ones, your beneficiaries. You're not borrowing from an exchange, from a lending desk, from an insurance company. You are borrowing from your beneficiaries, a spouse who thought they were going to get 18 when you died. Oh, sorry, you're only getting 16. But we have 2 million cash. We bought a new house, so I hope you're you're okay with that. That's basically how the policy loan element works. And if you don't want to pay taxes, like you would otherwise selling Bitcoin at $1 million a coin, then you can initiate policy loans and you never have to pay taxes because of that new cost basis. The final thing that comes with a meanwhile policy is the legacy element, the fact that there's a death benefit, that when you do pass, that your family will get, your beneficiaries will get your Bitcoin. We use Anchorage as our custodian, OCC federally chartered trust company, meaning they're bankruptcy remote, one of the premier regulators on the planet. Your Bitcoin is safely at Anchorage. When you pass, your Bitcoin is at Anchorage and it goes to your family tax-free, meaning it assumes a new cost basis the day you pass. Let's say you live a long, healthy life, Bitcoin's at $10 million a coin. Well, you pass away, your family gets Bitcoin, and the cost basis on the Bitcoin they get is 10 million a coin. It gets seamlessly transferred to them. They file a claim with Meanwhile. Meanwhile works with Anchorage. We reach out to the grieving family and we ask them what they want. Do you want Bitcoin? Give us a wallet address. We'll screen it and send it to you. Do you want dollars? You want to sell the Bitcoin? You don't know how to use crypto? We will help you sell it at Anchorage. It's tax-free because of the new cost basis. You will get cash wired to a bank account. Most people have self-custody, and it's scary because if you pass, if you tragically get hit by a bus tomorrow, what are the chances that your family or loved ones can access your wallet, that they know where it is, your safes, your
Sure.
safety
Yeah.
deposit boxes, your
Yeah.
private keys, your passwords? In life
So
insurance,
a
you never
problem
have to worry about
everybody, yeah, problem everybody's familiar with.
it. Exactly. So that's what we take away. So to wrap it all up, you get 2% yield every year on your Bitcoin. You get these tax-free policy loans, and you get the peace of mind that your Bitcoin will get transferred to your family or to your beneficiaries tax-free seamlessly without having to worry about them knowing how to use Bitcoin or wallets.
Yeah, I mean, it's all pretty straightforward. You know, one of the things you said about you're in Canada and the US, what about for folks outside the US? You know, those
We
territories.
are going global. We are
Yeah,
going to be expanding to East Asia, to Europe, to South America in due time over the course of this year and next. But yeah, our aspirations are to be one of the largest globally regulated and serving life insurance companies in the world. The only twist being that we're on the Bitcoin standard.
makes a lot of sense. And again, it's a simple pitch. Um, where have kind of you found the most success to date?
Most of the people that buy our policy are between ages 25 and 45 in the US and Canada. Many of them don't have families. They just like the policy loan element in and of itself. Others have young families and are just starting to think about life insurance. But the funny thing is that a lot of people don't view this as life insurance the way that you think of traditional life insurance. They view this as a way to store their Bitcoin for the long term. Everybody, for the most part, has this hodl mindset of holding Bitcoin for as long as humanly possible, trying not to sell. You think number go up, and ultimately you want it to pay for your life and hopefully your children's lives one day, to really take care of your family. But how are you going to make sure that it survives centuries, decades, centuries, et cetera, generations? Well, this is probably the best answer is life insurance, because on a ledger, in a safe, or you name it, there's so many different things that can go wrong. You can get hit in the head and forget your information. You can tragically pass and your family isn't as tech savvy as you. And so this is one of those tools that people who are thinking about holding Bitcoin for the long term view as a tax advantage way to hold your Bitcoin for the long term. And that happens to take the form of life insurance. But you're not necessarily looking for life insurance because term life is pretty cheap and it does the trick for 10 or 20 or 30 years. And it pays dollars, and it might match a mortgage. If you have a 30-year mortgage and you get a 30-year term and you want to protect your family, that's probably makes sense. But this is more of a long-term Bitcoin storage solution at Anchorage with yield, tax benefits, you name it.
Makes a lot of sense. You know, and I assume Anchorage is a good partner, you know, as well, and source of Bitcoin, folks who have Bitcoin. So great. So, you know, we always open it up for questions. So we can open it up for questions. If you're in the audience, just I think you can raise your hand.
Or you can type Q&A.
Yeah. And we'll open you up and bring you on stage. Let's see, can
This
you?
is being recorded. There will be a recording distributed to everyone afterwards.
Yeah, exactly. So let's see, how do I think, no, can people text me? Let's see, 1 second.
Oh, well, while we're waiting for people, if they want to
Yeah.
type questions in the Q&A, let me just to give a little brief overview. How do we get yield? How does 10 Bitcoin in premium become 18 in death benefit? Well, the way that we get yield, and it's 2% a year, is we predominantly work with miners or anyone really that has low cost basis Bitcoin on their balance sheet. Think miners have been mining for years. They might have mined Bitcoin at $100 a coin, $1,000 a coin, and they have this Bitcoin on their balance sheet. But miners also have CapEx, capital expenditures they need fiat for, whether it's their rent, whether it's electricity costs. And so the Bitcoin that they mined at $1,000 a coin, they don't want to sell it because they do have to pay very big taxes. They pay capital gains taxes, their cost basis the day they mined relative to today's price or when they sell it. And so what they can do in working with a life insurance company like us is the fact that we have long dated liabilities. We have people who are 25-year-old who have policies, their liabilities are 40, 50 years. And hence we are duration seeking. We work with miners who want to free up that loan capacity, want to free up their low cost basis Bitcoin. And so what they do is they, through a repo or repurchase agreement parity loan, they can send, meanwhile, as an example, 100 Bitcoin, low cost basis Bitcoin that they would never sell because the taxes would be too great. And we'll send them back 100 Bitcoin that assumes today's cost basis. They pay us just over 3%. And so really the way it mechanically works, they send us 100 Bitcoin, we send them 97 Bitcoin back. The 97 Bitcoin we send them back has today's cost basis. They can sell it immediately for zero tax liability, use it for all their CapEx. At the end of 1 year, they can pay back the 97 Bitcoin, or they can roll over to the next year by paying another 3%. And so what we've achieved in this sense is getting 3% Bitcoin denominated yield without any credit or counterparty risk because we have all 100 Bitcoin of our counterparties collateral. So it's a fully collateralized loan that takes no risk from our part. That's how we get yield. We give 2% to all of our policyholders and we keep 1% or whatever's on top of the 2% for ourselves. So that's how we get yield. All right, there's a couple questions here I'll go through. Is it possible to pay 10 Bitcoin as one payment instead of yearly payments by 1 Bitcoin? Yes and no. And let me answer what that means. There's something in the IRS for U.S. Citizens called a modified endowment contract, or a MEC. To be a non-modified endowment contract or a non-MEC means that there's no tax liability. There's no tax implication when you do get policy loans. In order to qualify as a non-MEC for a whole life insurance policy, your premium payments have to be paid over at least 7 years. We did it over 10 years just to be safe, and it's a nice round number. What you can do is prepay all of your 10 years of premiums up front. But what we're going to do is escrow that at Anchorage for you and deposit into your account one at a time each year on your behalf in order to maintain the non-MEC status. So essentially, you cannot borrow against all your big premium payments up front on year one. Your surrender value grows slowly over time based on your premiums and the yield, et cetera. And so you can prepay all your 10 Bitcoin or whatever premium you want up front, but you can't borrow against it all up front. The minimum policy size we do is 0.25 Bitcoin over 10 years. So that would be 0.025 Bitcoin a year in premium every year. If you did a 10 Bitcoin policy, it'd be 1 Bitcoin a year in premium every year, regardless of the dollar price. We don't care what the dollar price is because we're on the Bitcoin standard. 1 Bitcoin equals 1 Bitcoin. So while today it's $110,000, $111,000 a coin, and your premium of 1 Bitcoin is $111,000 in dollars. Next year, Bitcoin can double. but your premium is still 1 Bitcoin. The minimum amount I said is 0.25. The minimum age is 18, so we don't insure anyone under 18. We are working on having child and minor policies as well. There are a lot of grandparents we've been speaking to that want to gift their new grandkids Bitcoin life insurance policies, which would be amazing, and I'm pushing for, but we're still working on that. So 18 to 65 is the age range. What are the advantages for someone without any Bitcoin? How would that work? There are a lot of people without Bitcoin that are considering buying Bitcoin. The question is, how do you buy Bitcoin and where do you store it? Well, you can buy Bitcoin wherever you want, Coinbase, you name it. But what are you going to do with that Bitcoin and how long do you want to hold it for? Well, family offices, for example, are continuing to allocate or beginning to allocate into Bitcoin. And they want it growing yield in the most tax advantaged way, life insurance. And so if you're considering buying Bitcoin for the first time, we should talk and figure out if this is right for you. But I think that this is right for most people because it's just a hodl way to tax advantage with yield, grow your Bitcoin. You buy 1 Bitcoin, and if you're 30 years old, the death benefit on 1 is 2 Bitcoins. So you can double your Bitcoin over the course of your life, and you can borrow against that 2 Bitcoin. What jurisdictions accept the like-for-like repo as a way to defer capital gains tax? All jurisdictions. How miners are reporting. We operate on that repo where we do repo parity loans globally. Anyone in the world who has low cost basis Bitcoin that wants to enter into a repo with us, please reach out to me and I will happily talk you through it. And I think it makes sense for a lot of people with low cost basis. Bitcoin costs 3%, allows you to free up your Bitcoin for whatever you want. And at the end of the year, you can pay it back or roll it to the next year and keep going over and over. If I hold Bitcoin at a low tax basis and I pay premiums in Bitcoin, would the premium payment be a taxable event? Great question. Now, I should have said at the beginning of this recording, Lou, but I'm glad it's still recording, that we don't give tax advice and this is not investment advice, that this is just informative, but I can give some information regarding premium payments. All policyholders are responsible for calculating their own taxes and paying their own taxes. We as a life insurer don't issue 1099s. We don't issue, tax forms, IRS forms at the onset of a policy for anyone. So is paying your premium a taxable event? Talk to your CPA. I'll give you 2 anecdotes. We have clients that think it is a taxable event, paying your premium in Bitcoin, and others that say it's not. Now, for those who say it is, they think, well, you're turning Bitcoin into a life insurance financial vehicle or contract, and therefore it's some sort of realization event. And so you should pay your taxes. Others say, I'm moving my Bitcoin from BitGo to Anchorage, through Meanwhile, or from Coinbase to Anchorage, or from my self-custody to Anchorage, because everyone gets a segregated Anchorage wallet address for their Bitcoin, for their premium payments. And so moving Bitcoin from wallet to wallet or custodian to custodian is not a taxable event. And therefore, why would I pay my taxes in this case? We never, and Meanwhile, realize your Bitcoin into dollars. We don't sell Bitcoin into dollars. Our OpCo, our operating company, doesn't even have a bank account. So we will never convert or index your Bitcoin against the dollar. And therefore, a lot of people think it's not a taxable event. But like I said, not tax advice. And happy to talk in more detail if you want to reach out to me after this. So we have to contribute at least 2.5 Bitcoins to pay all up front? No. 0.25 Bitcoin is the minimum amount over 10 years paid annually. So 0.025 or like $2,500 is the annual at today's prices is the annual premium payment that you'd have to pay at minimum, given today's prices, to have a policy. So 0.025 for 10 years to total 0.25. And that's the size of your policy, and your death benefit would be larger than that. A couple more. Can we take a loan against premium year 1, and what will the loan rate? You have to wait 2 years to borrow against your surrender value. The loan rate is 3%. That'll never change on any outstanding loans. We can change the loan rate in the future for new loans, but if you have an outstanding loan at 3%, that 3% will never change while the loan is outstanding. But you do have to wait 2 years for AML purposes to borrow against your Bitcoin. Now, the other thing about that is you're borrowing against your surrender value. In life insurance, there is no surrender value in the first year. The surrender value starts accruing after your first policy anniversary. So at the very minimum, you could borrow after year 1, which we're actually working actively to get to. But right now, you have to wait for 2 years before you can start borrowing up to 90% of the surrender value. Is your Bitcoin secure and insured against hacking? Anchorage is one of the best custodians in the world. They are as secure as they come. They have insurance. They're bankruptcy remote. I'll leave it at that. And lastly, what are the general numbers for someone who is at retirement age already? Would it be close to flat? Yes. If you did 10 Bitcoin in premium and you're 64 years old, the death benefit might be 10.4. Whereas if you're 18 years old and you do 10 Bitcoin in premium, the death benefit is 25, 2.5x, 150% return. So the younger and healthier you are, the better it is to have a policy. And I'll leave on this note, Lou, there's 3 parties to every contract, life insurance contract. There's the owner, there's the insured, and there's the beneficiary. If you're close to retirement age and you have a child or a niece or nephew or a family member who is closer to 18 or 20 or 25, you can be the owner, you're responsible for paying the premiums, and you have access to the policy loans on somebody else's life. So a father can get a life insurance policy on his 18-year-old son or niece or nephew. There has to be something called insurable interest, so you can't get a stranger off the street. But you have the owner, they're responsible for paying the premiums, and they have access to the tax-free policy loans. Then you have the insured, a single human life, 18 to 65. And finally, the beneficiaries. That can be any person, any group of people, all your kids, grandkids, equal splits, lopsided splits, your favorite son gets most. It could be trusts. The owner can be a trust or an entity. The beneficiary can be a trust or an entity. The beneficiary can be a charity. So you have a lot of flexibility. And we work with a lot of family offices and estate planners who have different clients that have ILETs or different trusts, et cetera, that they figure out what the best fit is in with regards to them owning a policy, whether it's best to do it outright or in a trust. So yeah.
Okay, terrific.
That's good.
I put a link to the doc that you wanted to have linked. So that's in the chat for anybody who wants more information. You can go see that link that I put in the chat room. And we will be posting this on YouTube so there'll be a replay. So if somebody wants to share it with somebody else, they'll be able to do that. We'll send everybody a link to that as well. Jason, thanks for coming. It's pretty straightforward, and must be fun going around and talking to people about this. Are you on the on the Bitcoin circuit?
Yeah, I am speaking at a lot of conferences coming up, crypto conferences, family office events. There's a lot of stuff happening over Q4 that meanwhile me and my team will be at. I'd love to, if you could put my contact info for everyone to reach out to me. My email is Jason, Jason @meanwhile.bm. BM is for Bermuda. Feel free to reach out to me if you have any questions or want to chat. I'd be happy to answer questions in more detail and walk people through how everything works at Meanwhile.
Yeah, I'll send everybody again a follow-up with that info. So thanks everyone who stuck around till the end. Jason, thanks for for the education today. Super interesting stuff.
All right, take care, Lou.
Okay,
Bye, everyone.
bye.